Bitcoin is in play and a real possibility. The Japanese yen carry trade is a real possibility. The biggest threat that this market has faced this entire cycle is upon us. I'm Cairo Copeland. This is Reinvent Ideal, and you're watching Shut the Fud Up. We got a bunch of stories to get into today. Let's get started. Let me repeat myself. $40,000 Bitcoin is a real possibility. We are facing something that nobody else is talking about. And you see, I'm not even talking about the bad stuff that occurred today. I'm talking about destruction that nobody else out there has mentioned. Any other streamer or influencer or whatever that you're following, if they don't start talking about this, you got no reason to follow them because they're not looking out for you. Me, I'm trying my best to look out for you. I'm trying my best to give you the most honest views that I have, to give you the most honest analysis that I can possibly do. And sometimes you like what I got to say. Sometimes you won't. Today is one of those days that you won't. So it's a bit of a viewer warning here that, yeah, today, like the markets, is going to suck. But it's important that you deal with this stuff head on. It's important that you hear the sucky stuff head on so you know what to expect and you're not blindsided by it. And that way, you're able to do this.
Control yourself!
Because apparently nobody knows how to do that anymore, and that's why we got down to almost $85,000 Bitcoin today. I'm going to be the one to tell you the hard thing that nobody wants to hear, and that is it could go all the way down to $40,000. That doesn't mean that I've turned bearish. That doesn't mean that the next year is going to be nothing but a sucky bear market. I'm certainly not forecasting any of that. But there is an extreme risk in the market right now that I don't hear anyone else talking about. I see a few people post about it on X. Good on them. But all the other streamers out there are not talking about this. And they should be ashamed of themselves. And I'm going to rub it all in their faces if this happens. I hope it doesn't happen. I hope to God it doesn't. But so help me to Christ. If what I'm going to share with you today ends up happening, and I'm the only one that covered it, I will be screaming about it until the end of time that all the other scumbags that are streaming didn't talk about it. Just like how all the other scumbags were treating Sam Bankman-Fried like he was just a nice, swell guy. Just like how they all, right now, treat Vitalik with kid gloves and practically give him a little hand job under the desk when they're interviewing him, instead of confronting him and be like, hey, Vitalik, you big dumb jerk, what the heck is wrong with you? You are selling on people's heads on every single pump, and you're causing a lot of pain. You're destroying confidence in the market, and you are coming on here with a smile on your face, talking about what? You just got a new girlfriend or a new boyfriend or a new pet, whatever it is that you're into. And you want us to think highly of you. And you want the big institutions to come and invest in your piece of garbage coin when you don't even support it? I mean, I got a guy coming on. Don't know exactly when. But there's a hater out there who says Richard is a crypto terrorist. That's what he calls them. And I'm going to press him on this point. Be like, whoa, you think Richard's a terrorist? Have you seen Vitalik? Because he's the one dumping on people's heads. I think the foundation dumped a little bit today. But there's a much, much bigger story out there no one is talking about, and that is the very high likelihood of the Japanese carry trade unwinding And when that happens, if that happens, you're looking at Bitcoin at $40,000, possibly even $30,000. All right, all the bears will be 100% right in that case. And maybe the four-year fundamentalists will claim that as a victory and say, oh, yes, that proves it's the end of the four-year cycle, bear market now. Now, there is some good news if that does happen. But we got to talk about the bad news first. Before we get into that, though, let's go over the stuff that we always go over at the start of each program. How is the bloodbath market doing today? Oh, man, doing absolutely terrible. Look at this. It's so nasty, so disgusting. I wish everybody would just learn to
control yourself.
But nope, they don't want to listen to Margaret. They want her to cry some more. They want her to suffer. Yep. Like, what she went through in that movie just wasn't painful enough here for her. They got to make her suffer a lot more. I mean, look at Ethereum. Dear God, down 14% year to date. And you see, what's really sad about that is, like, it really didn't start the year off at a high price. It started a year off at a pretty sad, sorry low. Started it off at like the 3,000 range. So 14% down from there is very nasty. And by the way, if the yen carry trade blows up again here, you're going to be looking at Ethereum under $1,000. And you know what? 3 years ago, I would have said, oh my gosh, that's a steal. Grab it up as much as you can. I don't know if I can say that with how irresponsible and how much of a anti-fiduciary or anti-give a good god darn about the investors that Vitalik and the Ethereum Foundation have been. I mean, obviously, they're not a fiduciary. They're not under that obligation, so I really can't say that they had that obligation. But they've been taking the polar opposite of that stance this entire cycle. It's like they wanted everybody to suffer this cycle. All right. Let's take a look at some more coins here that I know got hit real bad. Let's see here. World Liberty Finance seems to be hanging on. I mean, it's down, but it's down only from 14 cents to 13 cents. When you see that thing capitulate, well, then you know that there's some serious trouble going on. So, while this is ugly and this is a lot of trouble, one thing that gives me a little bit of confidence is the fact that there's no capitulation in World Liberty Finance. When that goes down, that's when we panic. Same goes for the Trump token. When that goes down to like below $5, now we panic. Seems like Filecoin completely retraced all of the gains that it made recently, along with Internet Computer and everything. And I'm thinking maybe that it's retracing all of this stuff based on the rumors of the carry trade. There's a lot more going on out there than that, but I see it's a really big deal out there. There's more like a sell the rumor type thing that's happening right now. Take a look at EtherFi and Athena. These were coins that had like so much promise, and they're getting really kicked in the teeth right now, especially EtherFi. And it's EtherFi is a coin that like has so much going behind it too. Sonic. Got something to highlight about Sonic today. Yep. And it's one of those things that, like, when I point it out to you, I'm doing it to kind of show you, hey, don't be completely unhopeful, or don't give in to despair, or don't think that, you know, one thing has to happen. I'll get to it later. I'll get to it later, though. But the thing about I'm going to show you about Sonic is that, well, I'm doing it to give it to you hopeful. It's also kind of a sad thing to point out. Root completely bear trapped me and pulled the rug out from underneath me, all right? I seriously thought maybe something was happening in Root. Nothing was happening in Root. It completely retraced and went lower from where it went up. Oh, man. The RH ecosystem has been hit real bad, really bad. And if that carry trade unwinds, guys, you're looking at the possibility of a 0 being added to the decimal, to the right side of the decimal, to each one of the core coins. That is how serious this carry trade situation is, guys. You got to know what's about to happen. You got to know what's about to happen, because I'll tell you what, if you can't handle it, I'm not telling you what to do, but if you can't handle it, now's the time to do the soul searching, because it is very possible that you're looking at 5 zeros behind the decimal point on Pulse and Pulse X. It's very possible you're looking at 1 0 behind the decimal point on Ink Token. And it's very possible you're looking at 3 zeros behind the decimal point on Hex. Both versions of it. Because when the trade unwinds, if the Japanese bond yields go up, it's going to hit the stock market really hard. And you know what happens to us when the stock market gets hit real hard. So if you can't handle it, now's the time to do the soul searching. Because I'll tell you what, before the end of this year, it 100% will get really ugly. Really, really ugly. All right? Now, I will give you a lot. It's not going to be an all nasty, bearish day here where I give you nothing but things to be fearful of. I will give you things to be optimistic about. That is coming later, guys. I know I sound very dire. I sound I got like a serious death tone going on right now. But I'll tell you what, there are things still to be optimistic about. Well, let's deal with the ugly parts here first. Yeah, look at this. In TradFi today, life is sucking here too. It's possible that before this year is over, especially if the yen trade unwinds, these 3 major indexes go right back down to where they were in April during that stupid Liberation Day thing. And yeah, I might as well get this part out of the way here. The horrible economy that we have right now and the horrible market that we're all experiencing right now, a big part of what's responsible for it are the stupid tariffs. And I know that some people are not going to like hearing me say this. I mean, I voted for Trump, and I'm a huge supporter of him still. But those tariffs are completely stupid, and they need to go. And I hope that the Supreme Court overrules them. I really do hope that. Because it completely wrecked this entire year for us and for a lot of other people out there. I mean, you heard Jerome Powell himself say they would have continued cutting rates had it not been for the tariffs. And Trump, if you don't get your head out of your butt, you're going to lose the midterms, and you're going to be a lame duck for the rest of your presidency. And I know you don't want that. I'm talking like, he's listening to me, which I'm sure he's not. Oh, Barron, if Barron Trump is listening to me, man, that'd be great if Barron was. You got to tell your dad, hey, you need to get your head out of your butt. Because the general economy is really suffering. Talk about the jobs report that came out today. And what's not being said, or what's not being reported about. See, what's being reported about it, let's find it. Where is it here? Jobs report. It's being reported. It was like, oh, we added jobs. The economy is hot. The jobs market is resilient. We're going to hear that probably at the next Fed meeting. Is resilient. See, what was it? Non-farm payroll. There's a story from today here. Oh, is this recent here? Yen bid, dollar steadies. We'll get to that later. See, this was from the day before, but where was that non-farm payroll story? Here we go. Delayed September report shows U.S. added 119,000 jobs, more than expected. Everything must be great, right? Yay! It was more than expected. But the unemployment rate edged higher. And you're probably thinking, well, how in the heck is that possible? How can you add more jobs but then unemployment rate go up higher? It's a little bit messy, but here's kind of the deal of what's going on with this job story is this here. I mean, one, this is the initial number. It's not the revision. Believe me, when the revisions come out, they're probably going to say, yeah, all the 119,000 jobs, we lied. They don't exist. Because if you look at this one here, I mean, they're already showing revisions of like 26,000 jobs for August being revised down. So August turned out to be a negative number, down 4,000 jobs when it was 22,000 that we supposedly got. This number here, 119,000, it could be completely erased. Completely. And when you look at that here from, let's see, April onward, it's been nothing but bad months. Best one we had was, 72,000 jobs added. That could get revised down. What happened in April, by the way? Oh, that's right. That's stupid Liberation Day. Maybe we should start calling it Retardation Day. Because everything was going okay. In fact, it was even climbing. Looked like we were recovering here. Then came April, and that screwed everything up. So this is the thing that is not being talked about. They're saying, 119,000, this is great. No, it is not. Because look at the revisions that were also done in this report. It really sucks. There's something else that really sucks. The DXY is climbing. Now, why is it climbing? It's got to do with the yen, because the yen is weakening. So that makes the dollar stronger by default. But anything that's priced in dollars gets a lot cheaper. Gee, what's priced in dollars? Crypto, that's right. As well as the 493 other stocks out there. So it looked like the trend was heading down for a while. We look at it like here, it was like, well, it was over 100, then it started going down to almost, it hit 98, it just tapped it for a second, 98.99, and then shot right back up above 100. Y'all remember how there was like this one putz that tried telling me the DXY doesn't matter? It's a good thing y'all listen to me, because I've been telling you the whole damn time that it does matter. And here's the proof. Why does today suck? Why did yesterday suck? Because the dollar got stronger. That's why. Some clown out there wants to tell you, it doesn't matter. And he's going to be one of the people that are like crying the hardest when the prices go lower and get uglier and get worse. And you know what I'm going to have to say to him?
Sometimes you just gotta shut the FUD up.
That's what I'm going to have to say. He's not going to shut the FUD up. But, yep, it's getting nasty, and it's going to get nastier. Don't know if this thing continues climbing. I think this thing might stay sideways in the 100 range for a while. Probably at least till the end of the year. A lot of things going to occur in January. Like when we get the ruling on the tariffs, and hopefully it goes the way I want it to, well, then we have a real chance at seeing the dollar index plunge, because dollar will get weaker. Not much progress being made here on interest rates, at least not in the United States. I do have a lot to talk about as far as interest rates in Japan. But here in the United States, 10-year Treasury really is just kind of holding above 4.09. Matter of fact, let's check out what's the trend. What's the trend on it been? Let's see if we go to markets and bonds. All right. Let's see. In the 10-year Treasury. So it appears that it's in a downtrend. I mean, it certainly is down from where it started the year at. It was at 4.8% in January. Man, we had some wild swings throughout this. Man, this is very volatile for the past year and very unusual. Very, very unusual to be seeing activity swinging wildly like this in a 10-year Treasury. I mean, without much action in interest rates. Because like throughout the entire year, they had been holding off reductions in interest rates up until September. But then, look at what we got here. I mean, they have gotten down a little bit since the 2 rate cuts that we got. But it seems like after the rate cuts occurred, like, yeah, here was the September rate cut, they just started going back up. Then they started going down, pricing in the October rate cut. Then they started going right back up. What are they going to do with December? Especially now that we know that, like, hey, a rate cut is probably not coming. In fact, when we look at the CME and what they say about it is, they're already pricing it in here that they're just going to pause. They're not going to do anything. Now, this, I think, is going to be bad for markets all across the board. But this is also going to do something else here. This is going to put the Fed behind so that the next time that they do cut, they will have to probably make up for this one that they're skipping. And they'll have to do a 50 basis point cut when that time comes. I don't know when that time's going to come, though. It's just way too early to tell. But when that time comes, they're going to look back at this decision here and think, oh, God, this was a huge mistake. Huge mistake. Yeah. This is the real big story. Looking at the Japanese 40-year Treasury, and you see this thing is climbing. It's climbed before. Like, see, this was in April. The thing had gotten pretty high right there in May. But where was it? Just a little bit earlier here in 2024. I think it was August was the big scare. Like, we didn't really have a big upward push in it there. The Bank of Japan had stepped in. But this trend right here is frightening because, like, if this gets up above 4%, well, then the math stops making sense in the Japanese carry trade. All right. Now, here's something we want to talk about before we get into anything to do with Japan. All right, so it reclaimed 87. There's some good news there. But let's take a look just a month back here. We're going to look at our previous high in October. Let's see. How far back do I got to go here? It was October the 6th, right? And of course, CoinMarketCap's not going to cooperate with me. All right, so we can see it right here in October the 6th. It's the previous high where it closed at 124,700. There is a huge scandal behind that nobody is talking about. And because they're not talking about it, I don't know why you would follow them or listen to them, because either they're ignorant or they don't know or they don't understand it, which makes them not worthy of listening to. The only person you should be listening to is me, quite frankly. Here's what's going on here with that top. You know what was going on there? Much of the ownership of Bitcoin, much of the purchase orders of it were through the ETF. And everyone thinks, well, the ETF, that's retail investors buying that. That's not institutions. You would think that, but if you thought that, you'd be wrong. Because on the Bloomberg terminal, we can look up who were some of the biggest purchasers at that time, who were some of the biggest holders at that time. The 5 largest holders of the IBIT BlackRock ETF for Bitcoin were hedge funds. And you might think, well, why on earth would a hedge fund buy the ETF? Because hedge funds, they're much less regulated than mutual funds. They could probably just go out and buy Bitcoin itself, right? So why would they buy the ETF?
A legitimate question, young man, deserving a legitimate answer. Now then.
The reason why is because they're doing what's called a basis trade, where they buy shares of the ETF and also short the futures contract using the shares of the ETF to cover that short position, to be collateral in that. So to kind of explain just what this is here. A basis trade is basically a financial strategy that's used to exploit and take advantage of those temporary price discrepancies between an asset's spot price or its current market value and the price of its futures contract. And when we say basis, well, that refers to the price difference. Like the basis, it equals the futures price minus the spot price. So when you got markets with commodities, bonds, or even crypto, the basis, it can widen or it can narrow just due to the factors of like supply and demand imbalances or interest rates, storage costs, or just overall market sentiment. So a trader is trying to make a profit as the basis converges towards zero as the futures contract approaches expiration. All right, when they say, well, we got to close the CME gap. A lot of this is going on when there is a CME gap. Because you see, it's considered a form of arbitrage. And that just means that it's a very low-risk trade when you do it right. When you're focusing on the spread instead of like directional bets on the asset's price. So it's practically free money. And hedge funds can do it because they get to do shorting. They can short the futures contract. Mutual funds can't short a futures contract. Now, I think like most retail investors could. It's like, to be able to short, you need to be approved for margin trading, and you got to be rich to do that. Now, it typically requires some more leverage to amplify the return, but it's very popular with hedge funds, very popular with institutional investors. All right. Now, in the context of like, how did this work with Bitcoin in October? Well, this basis trade's gotten a lot more popular since the Bitcoin ETF came around, which I think is probably why the ETF got approved in the first place. Because what happens with a lot of SEC activity is that the SEC, it's not the police that everybody thinks it is here, where like they're not the fun police so much for the market. Sometimes the big institutions are kind of able to bully and push around the SEC just because of the amount of money and pull that they have. Like the Ethereum ETF got approved when Gensler was still doing his crusade against crypto. How did that happen? I mean, us seeing the interview with Cathie Wood where she's saying, hey, we're going to put the pressure on Gensler. He's going to have to approve that whether he likes it or not. Because a lot of institutions were kind of lining up and saying, hey, you're preventing us from making a lot of money. You don't have the right or the authority to do that. I mean, technically he has the authority to do that, but those institutions could have caused a lot more pain for the markets if they wanted to. And a lot of that would fall squarely on Gensler. I mean, it's not like he's the it's not like he has the power or pulling the strings behind all the market and everything, but when markets go down tremendously, the first person that people kind of look at besides the president is the SEC chairman. Like back in 2008, everybody was looking at I think his name was Chris Cox, and he had to resign because of how bad that was. So a big chunk of the buying that occurred in October was just hedge funds, 5 of them in particular, that were buying the Bitcoin ETF, pushing the price up so they could do their basis trade for it. And that's it. There wasn't no retail gold rush into Bitcoin in October. In fact, most of the action in Bitcoin this entire year has been hedge fund basis trade driven. So what this should tell you is that this entire year, we've actually been in a bear market, as evidenced by everything else sucking, and Bitcoin being the only thing that did anything at all. And the reason it did anything at all is because of all of this hedge fund basis trading. That is the explanation for 2025. Why is 2025 sucked? It's supposed to be the bull market year. It wasn't the bull market year. It was the bear market year. And then some clown says, oh, well, what about Bitcoin? It did good. Yeah, because hedge funds were doing basis trades on the ETF. So this entire year, we've actually already been in a bear market. That's why I don't think one is coming in 2026.
Hey man, just want to let you know that sometimes you gotta shut the fuck up. And this current time is just one of those times you gotta shut the fuck up. I don't think you're a bad person. I just don't want to hear you talking anymore. You gotta shut up.
That's the story, and I'm sticking to it. But that's the truth. Everybody was all saying, oh, a bunch of retail piled in and now they're all gone. No, bro. Only thing that made Bitcoin do anything at all this year were those basis trades. And if you don't understand, if you don't know what I mean by that, if you don't understand it, well, you better learn how to understand it, because these basis trades are going to be a much bigger deal in the future. All right. Now let's talk about some more bad news that I know that we don't want to talk about. And first, let's check this out here. This is the current trend on Fed net liquidity. It is reversing. That's good. But man, it's moving very, very slowly. Very slow. And in fact, what else we should look at is the Treasury General account balance. Look at that on Fred. Is this it here? I think, no, that's not it. Or yeah, it is. It is, okay. All right, so notice this here in the Treasury General account. Even though the government is opened back up, the balance is actually still right where it was. All right, this is as of yesterday. The balance is just under $1 trillion. Liquidity is being starved out of these markets. Now, why is it? What's happening here? I mean, is Scott Bessent trying to go straight to war here with the Fed and like force them to take other measures for liquidity? I mean, you can't really ever never say never when it comes to good old Scotty, but no, I don't think that that's what it is here. You see, the issue is the types of treasuries that are being issued are very short term. Matter of fact, I got a chart for that. Where is it? It's here. Yeah, here it is. The treasuries that are being issued are those short-term T-bills. The majority of the United States debt is going to be very short-term, because on the short end, those short-term debts, because you have to pay them back sooner, the interest rate is lower. And as you see right now, the interest rate on the 10 and 20 and 30-year treasuries are really high. Like we looked at it earlier. It was over here. It's over 4%. Hey, did this change recently? No, just slightly. All right, so 4% on the 10-year, 4.73% on the 20, 4.72 on the 30. You don't want to pay those rates. So what they're doing is they're issuing a lot more treasuries on the short end, which is down below 4%. You know, like here's 3.85 on the 3-month. Here's 3.67 on the 1 year. So because they're issuing so much short-term debt, they might have to keep the Treasury General account at the level that it's at right now for a long time until interest rates come down, because if you're constantly issuing out a bunch of new bills and everything and you have a trade fail or you have an auction that doesn't go very well, well, then what the Treasury wants to be able to do is rush in and buy back those bills immediately. You might see a lot of posts on X saying, well, the Treasury bought back some bonds or it bought back some of its debt. The reason why it's doing that is because they want to hide the fact that there's less demand for U.S. debt. So whenever they're buying back their own debt, they're trying to kind of sweep dirt under the carpet. So $693 billion in treasuries was issued last week, 9 different auctions, 549, practically 80% of it, all came from T-bills, meaning 1 year or less short-term debt. They did roll over some 10 years, and they rolled over some 30 years, or they issued some new ones. But for the most part, it was all T-bills, at least 80% of it. And because they are doing so much short-term debt, this Treasury General account is going to stay fuller for longer. It might even keep getting rebuilt here as they keep going to the short end of the curve. So is this something intentional by Scott Bessent to try to put more pressure on the Federal Reserve? Possible. I mean, that falls in line with the fiscal dominance story that's happening and is real. But the long-term effects here of this, or the short-term, the short-term effects of this here is prices are going to suck because liquidity or loose money in the economy in circulation is going to be lower for longer. So our prices of our assets are going to be lower for longer. All right. Now, what else we want to talk about here with the Fed is that they haven't updated the balance sheet holdings, but I think that, we are walking down a very tight rope. I would hope and think that Trump and Bessent know what they're doing, and they know that they're playing a very dangerous game, and I would hope that they got cards that they haven't shown yet. But the more I look at this whole Lisa Cook situation, the less I start to think that. The real bad news for today, guys, is it's very likely that the Supreme Court rules in favor of Lisa Cook. I think that's very likely. And she stays on at the Federal Reserve and stays as a vote against Trump. And you might be thinking, well, how can it be right here? Don't they have evidence on her? They have a case on her. And the case is just, they want the Supreme Court to rule in favor of Trump, to say that he has the authority to tell a Federal Reserve member to step down over allegations and investigations. Because Lisa Cook hasn't been convicted of mortgage fraud. She hasn't been indicted, hasn't been brought up on charges at the Justice Department yet. They haven't prosecuted her. And the Justice Department has had a referral to investigate her ever since August, and they haven't done it yet. And my thinking is, well, why haven't you done it if you got the evidence, if she did the deed, and you want her out as soon as you can? Why haven't you started prosecuting her? Because you see, the Justice Department, when they got evidence on you, they got a 93% conviction rate, and they used that to negotiate plea deals with you. And what they could have said here is, well, we'll drop the charges if you resign, because you're an embarrassment to the country. So if you resign and you're no longer an embarrassment to the country, we'll drop the charges and you don't serve prison time. If they had solid evidence on her, I think they would have done that already. But since they haven't done it, and there's been zero progress on it at the Justice Department ever since August, I think they don't really have anything on her. And it's going to be very hard to win that Supreme Court case to say to the 9 justices that, yes, Trump should have the power to fire a Fed governor based on the allegations that they did some wrongdoing, No indictment yet, no evidence presented yet, no conviction, and we're supposed to just give him that power? I don't think that the 9 justices are going to rule in favor of that. And also, the basis on which he can fire, it may be seen as they're broadening the definition of you can fire her for cause. You're broadening the definition of for cause. It's possible that they're going to say, well, we can't really do this here because then you have the power to fire all the other people at the Federal Reserve anytime you want for any reason you want. And while you might like that with Trump right now, you're not going to like that if, say, Gavin Newsom becomes president and does the same thing. So it doesn't look like that Supreme Court ruling is going to be in favor of Trump. And that means that we're going to be relying on the good graces of Jerome Powell to not only step down when his term ends as Fed chairman, but to also resign as a Fed governor, because his term as Fed governor runs all the way to 2028. And we don't want him to still be there and be a thorn in the side of not turning on the money printer. Because all those, when it comes to the Federal Reserve Board makeup, you got 4 governors right now who are against any more easing and are definitely against turning on the money printer. And by money printer, I'm talking about expanding the Federal Reserve's balance sheet. We call that quantitative easing. All right. So we're going to be relying on Jerome Powell to step down as a governor. Maybe he will, maybe he won't. He hasn't said. And it's anybody's guess. We'll be relying on that, or we'll be relying on a great disaster to occur that forces them to turn on the money printer. And I do think there is a disaster on the horizon that could do that. But you see, I'm in a tough spot here. I don't want to root for a great disaster to occur. Because even though it will be good in the long run, in the short run, a lot of people are going to experience a lot of pain that they did not see coming. It could get really ugly out there. We'll talk about exactly what that is here, but I wanted to bring this up here, that the big bad news is that I don't think we get Lisa Cook off the board. I'm trying to, I reached out to Nuclear Herbs. I sent him a DM and asked him if this is something that he has, if it's within his expertise to talk about. Because he's the legal expert of the community. We'll see if he has opinions on the Supreme Court rulings, not just on Lisa Cook, but also on the tariffs. Now, here's the deal with the tariffs. 23% chance that the court rules in favor of them. This is actually some good news. Because I'll tell you, man, I love Trump. I was happy to vote for him. I do not like these tariffs, and neither should you, because tariffs have wrecked this entire year, particularly for the economy and particularly for crypto. Man, the only thing that kept GDP positive this year was 2 things. One was deficit spending, and then 2 is all the AI CapEx. If you didn't have those 2 things, we would have been in a recession all year long, and a big chunk of this is the tariffs. Because you see, who's paying these tariffs? It's not the foreigners. We can easily check that, because when you look at the price of exports and when you look at the income of importers, what we see is that there's not been any change in the price of the exports. But there has been a decline in the income of the importers because they're having to pay these tariffs. They're absorbing those costs because they don't have the pricing power to raise the prices on the consumer. Now, Jerome Powell is going to be saying, oh, well, the tariffs have caused inflation. It's not inflation that's gone to the consumer, though. It's inflation that's gone to the importers. So what happens is, as the importer pays the tariff, let's just say that the tariff is $1. All right. Like I run a very small import business and I have a $1 tariff and I'm paying it. That's $1 less that's circulating the economy. It's not running around, going from person to person. I can't pay employees with it. I can't pay other business partners with it. And so when I can't, when this dollar is not circulating in the economy and it's going into the Treasury General account, that means that the economy has a smaller supply of money that can end up in financial assets. Because if you put it in the economy, you put it in the system and it's circulating around, eventually it's going to end up in like I pay an employee and maybe my employee goes and invests it in crypto or sticks it in his 401k and pushes other investment down the risk spectrum, the line of dominoes. I've done this demonstration several times. I don't think I need to do it again. But the amount of money that was raised by the tariffs is really just money that was sucked out of the U.S. economy. I'm sorry if you love Trump and you love the tariffs. I'm sorry you're going to hate me, but it's the darn truth. I got to tell you guys the truth. And I'm telling you the truth here because I like Trump and I support him, but these tariffs are garbage and they need to go. So I am hoping that the Supreme Court reverses them. I think that is going to cause some serious chaos, though, in the markets when that happens. Still a lot to be determined about whether they're going to have to refund the money or what they're going to need to do about it. But when they do, a couple of things will happen. One, the TGA will get some significant drawdowns if they have to refund it, and they will stop extracting money from the economy. And then two, the dollar will get weaker. The deficit will get wider. This is all bad in the short term, but in the long term, this is all going to end up good because it could cause enough of a negative force on the economy to make the Fed do a lot more easing. All right. But the real disaster that we got to worry about is Japan. We're going to talk about that when we come back. You're listening to a Reinvent Ideal live stream. The phrase Reinvent Ideal isn't just clever wordplay. It's a manifesto. For decades, society handed us a dusty old blueprint for life. Work 9 to 5, climb a corporate ladder, buy a house you can't afford, marry young, pump out kids, spend 40 years in a hamster wheel, and if you're lucky, retire at 65 with a gold watch and arthritis. That's the ideal we inherited, but it's a lie. A boomer-delivered illusion that made sense in 1970. But in today's world, it's a recipe for debt, burnout, and disappointment. Reinvent Ideal is the antidote. It's about rejecting the outdated script and designing a new one. A life where freedom, autonomy, and leverage replace status chasing and financial enslavement. Where your ideal isn't dictated by suburbia and social media, but what keeps you sane, sovereign, and alive. Instead of status symbols, we pursue rare and in-demand skills that buy independence. Instead of debt-fueled materialism, we choose minimalism, shedding liabilities and obligations. Instead of working to death, we embrace crypto and investments that multiply freedom instead of shrinking it. The new ideal isn't about fitting into someone else's mold. It's about building a life that maximizes your time, choices, and sovereignty. Reinvent Ideal is about giving yourself permission to redraw the map. This was a story from yesterday about the Japanese yen and how it is basically taking a bath here. Yen falls as Japan monitors market with a sense of urgency. I sure hope you're monitoring it with a sense of urgency. So this is my girlfriend out there, Sane Takeshi, who is doing her agenda of lots of stimulus spending and everything. She's going to deliver huge spending packages, and they want low interest rates. But here's the thing, is that as they do this stimulus spending, it is going to reduce the purchasing power of the yen. It's going to weaken against the dollar. And when that happens, when the yen gets weaker, the interest rates on the bonds in Japan are also going to be getting higher. Or the weakness of the yen is actually it's a lagging effect of it here and everything. So what's happening first is the interest rates on these bonds are going up. As you can see it right here, because the prices are coming down. So like these Japanese government bonds, like this is the 2-year, the 5, the 10, the 20, and the 30. And the 30 is the one that everybody's paying attention to, because right now the yield is at 3.36%. But I'll tell you what, like what's scarier to me is this one. The Japanese 40-year treasury bond is at 3.73. And you might be thinking, well, wait a minute. Why do we care? Because like the United States treasury bonds for shorter terms, just the 10-year treasury is over 4%. Well, you got to bear in mind the United States is a much bigger country, and the debt is a lot bigger in the United States. But this here in Japan, this is a big deal for them because of how small they are relative to us. Now, what has been kind of keeping the markets on like artificial life support for at least the last 20 years has been something called the yen carry trade. And that just means you borrow money in yen at Japanese's low interest rates, because their interest rates are lower than our interest rates. You borrow the money from them, and then you invest that money in higher yielding assets, such as U.S. stocks, bonds, or even emerging markets. And it's been very popular for decades. Lots of hedge funds do it. Lots of institutions do it. Everybody does it. And when you threaten this carry trade, you're threatening a lot of people. So is the carry trade threatened by Japan's rise in bond yields? Because you notice they're going up. I mean, look at this here. On the 30-year, it went from 3.35 all the way up to 3.73. That's a very sharp spike in those bonds. Very sharp spike for Japan. Because normally, like, they're not a very messy country in that sense. And also, like, what else we should look at here is the currency exchange. Where's the yen currently at? Come on, load. Here we go. Major currency pairs. 157.44. That's the strength of the dollar versus the Japanese yen. So this means that the yen is weakening. This is a sharp spike in that relationship, going from 153 up to 157. And that's why people are starting to get worried about the Japanese yen carry trade. Now, how does this affect crypto? How does this affect everything? I'll tell you exactly how it affects it all. These rising Japanese bond yields are a clear threat with it, because I'm going to talk about like why is the why are the yields rising? Sanae Takeshi wants to do a lot of fiscal stimulus. So there's going to be a lot of spending. Talking about 17 to 25 trillion yen, which sounds like a lot, but you got to remember the yen is it's very small, or it has very little purchasing power. So that's more like $1 trillion. They want to do a lot of stimulus packages to combat inflation, which doesn't really make much sense. To boost the growth, though. Now, the problem with doing that right now is that Japan already has a 250% debt to GDP. Means the economy of Japan is so dependent already on government spending, and now you're doing a lot more government spending. How are you going to have growth? And what you're doing there is you're suppressing growth in that sense, because as your debt grows and people are attracted to buy that debt because there's more of it and the yields are higher, there's less money to go around to other investments. So the higher yields will also increase the borrowing costs of the government. And because it increased the borrowing costs of the government, they could go into a death spiral where they're just adding more and more debt and it gets unsustainable. But also the real big problem of it is that these higher yields increase borrowing costs in yen for everybody else. And that eats away at the profitability of a carry trade where you can borrow money in yen at the Japanese rate and then go invest it in other markets that have higher rates. And it gets to be a mathematical problem to the point where, this trade doesn't make sense anymore. And also, when you make these government bonds more attractive to Japanese investors, when the yields go up, that could trigger repatriation, which means Japanese nationals will sell foreign assets to buy the domestic bonds. And most of Japan's citizens, or most of Japan's investment really, is invested internationally outside of the country. They were actually a big player in France. And of course, they're going to repatriate a lot of the money that they had invested in France because France is going to be crumbling. France will be in much worse trouble. Now, talk about the decline of the yen. Now, this by itself is not so much the threat, but it's something that is kind of like a cousin to the threat to the trade. And the thing here is that the yen had recently slumped to a 10-month low. It was 160 to 165 per dollar. And it was weakest against the euro. And it's basically been the worst performing currency in the entire G10 alliance. So a weaker yen means that when carry traders convert their foreign profits back to yen to repay loans, well, they'll get more yen per unit of foreign currency, and that kind of boosts the return and makes it more attractive to do the carry trade. In fact, like as the yen gets weaker, that's the whole reason why you would even do it to begin with, because you gotta when you pay back your loan, you do have to go back to yen. But the yen decline that we're experiencing right now is intertwined with the spike in yields because it's coming from the loose fiscal policy and the low interest rates that they've been experiencing. And we're talking about the real interest rates, though, because you see, they got inflation going on in Japan. And when we say real interest rate, that means we're accounting for inflation. So if we got a bond that, say, pays 2%, but inflation out there is 1.5%, well, that means it's just a 0.5% real interest rate. So it's unsettling to have both of these things occurring at the same time where the yen declines while the yield goes higher, because that's just encouraging more of the Japanese locals to invest their money into Japanese bonds as opposed to internationally. Now, the yen's weakness, if it continues to weaken, it's good for the carry trade. It will support it. But the rising yield is the bigger risk. Yeah. And all of this stimulus spending that they're doing is to fight off the inflation and strengthen the yen in Japan. Suppose that all of the stimulus spending they do is successful, and it does strengthen the yen, while the yields are still rising. Immediately, the carry trade unwinds. It's also looking like the Bank of Japan will raise interest rates coming up in December. Big problem. Big problem. All right. So what are the outcomes for the larger economy if the trade unwinds? We saw a preview of it in August of 2024. Everything took a pretty big hit. Everything will take a big hit again if it happens. And we're talking much, much worse than before. Because what it does is it doesn't just scare people and cause them to sell their assets. It causes a lot of what we call forced selling. Because when you have assets that are funded by the carry trade and now it's unwinding. You're just gonna have to sell those assets to pay back your Japanese loan, and lots of high risk assets are running off of that, like U.S. tech, momentum stocks, growth stocks, emerging markets, cryptocurrencies for sure. I mean, you saw a sharp decline in everything back in 2024. I mean, Bitcoin in particular took a hit, but the U.S. would see a lot of capital outflows when Japanese investors repatriate their funds. That's a big problem for the United States Treasury because Japan holds about, forget exactly how much. They hold a lot of U.S. Treasuries. I think it's in the trillions, right? Let me look that one up. How much does Japan hold in U.S. Treasuries? Yeah, it's about $1 trillion. So if they were to repatriate $1 trillion, it's a huge problem for the United States. All right, you'd be looking at those treasury yields spiking above 5%. And if those treasury yields spike above 5%, there's not much reason to hold on to risk assets when you can get a risk-free 5%. And this would also raise borrowing costs in the United States, and it would threaten even what we call American exceptionalism. Because you see, it's reducing foreign inflows into the tech sector here in the United States. The Dow Jones could get chopped in half in that scenario. And when you got that problem going on, in addition to U.S. inflation and other policy shifts going on, that could cause a bear market in just about every asset. Frankly, it would be financial Armageddon. Higher Japanese bond yields just elevate borrowing costs everywhere, and that would slow all the economic growth. We'd be in a recession deeper than the one we're in right now. Japan's domestic economy would also suffer from higher debt servicing because, all right, 23% of all the tax revenue they collect, that they bring in, is going to pay the debt servicing costs. Their stock market would get hit. It would bring down our stock market, and that would bring down every other market, and it would bring down probably the entire economy because right now, the only thing that's keeping the economy alive is the fact that rich people are making a killing on their stocks, and they're doing 50% of all the consumer spending out there. So, well, I don't mean to scare you all. I got to tell you this here. Usually I like to be funny on these streams. I like to kid around and be very positive and optimistic, and I still am optimistic. But I really got to beat this into you guys' heads here, just how serious this is. This is the most serious threat that we have faced this entire cycle. This is worse than anything and everything that Gary Gensler, Jerome Powell, and everyone else that was a threat to crypto. This is a far greater threat than all of that stuff combined. That's how serious this thing could get. That's where we would see the possibility of $30,000 Bitcoin and $200 Ethereum. And all of the core assets, all the core coins in the RH ecosystem would have another zero added behind the decimal. Do I have your attention yet? I gotta be like BitBoy. Do I have your attention now? It's not something to be. It's not something to take lightly. It's not something that's funny. All right. So I'm not trying to scare you or anything, but I am telling you that this is a real possibility, and if you can't handle it, you need to get out now.
Control yourself!
All right. Now I'll tell you what I'm doing. This is not me saying sell. This is not me telling you what to do, but I will tell you what I'm doing. And here's what I'm doing. I'm not selling. I'll keep everything as it is. But I'm not adding anything more. I'm not buying anything more. I used to have a daily DCA going on. I'm not doing it right now. I mean, I'm accumulating cash. I guess like it's okay to accumulate USDC or Tether, stable coins. I think it's okay to do that. If you're going to do a DCA, you do a DCA into a stable coin. But I'm not buying anything right now. And I'm not buying until those Japanese bond yields go down. When those bond yields go down, that's when I'm going to start buying back in. Or if the carry trade blows back up and causes a giant wipeout, it will cause a giant wipeout. A lot of stuff will go real close to zero. Not saying that all the coins will go to zero, but they'll go real close to it. If that happens, well, then I'm going to be looking at what's going to be the U.S. policy response before I make any trades or any orders here. And what could be the U.S. policy response? That's what we should talk about next here. But there was like some more. Yeah, here's what's going on with the yen. Whew. Getting weaker and weaker. I mean, this looks like the chart of an altcoin right here. But this is just the value of the yen going down, which it is supporting the carry trade. But if those bond yields go up, it's going to be a big problem, absolute big problem. Because you see, as the yen gets weaker, that causes inflation to strengthen out there in Japan. And what the Bank of Japan does out there is kind of the same thing that the Federal Reserve does. And that is they're going to raise the interest rates. Because you see, like, Sune Takeshi, she doesn't have power over the Bank of Japan. They are kind of independent there. And if they decide to raise those interest rates because they think that the Japanese yen is too weak and they want to strengthen it by increasing those interest rates on those Japanese bonds, well, then the carry trade no longer makes mathematical sense and people stop doing it and it crashes the economy and markets all around. We're looking at the S&P 500. Man, let's see, it's at like 6,500 right now. The carry trade unwinds, you'd be looking at the S&P 500 potentially going right down to 4,000, maybe even 3,500. That is an absolute real possibility. Now, chaos like that, nobody in Washington wants to see chaos like that occur. So there'd be emergency sessions of Congress. There would be an emergency meeting at the Federal Reserve. Because you see, they all want to get reelected. None of them are going to get reelected. Nobody in the midterms in Congress is going to get reelected if you got the S&P getting chopped down by even 1,000 points. I mean, I think even 100 points on the S&P, that kind of loss, it would just that alone would scare so many people and cause a panic sell-off as well. So it'd go down a lot faster. But if that does happen, immediately, like, things are going to really suck. I mean, that's where we see $40,000 to $30,000 Bitcoin. But some good can come out of this here in the long term, because what can happen is the Fed will do an emergency meeting and start doing emergency rate cuts. See emergency rate cuts happening at the Fed. I don't know how deep the cut would be, but I imagine it'd be quite deep. Because when you're looking at a decline like that here, I mean, you got to do whatever you can to get that market back to where it was. All right. I don't think it'd be like taking it all the way down to zero, though. If they took it all the way down to zero while inflation is still a problem like it is, that just seems like out of the Fed's playbook. But they would opt for a lot more rate cuts. And also to prevent forced liquidations by investors, because Japanese funds are holding trillions of U.S. treasuries and equities. The reason why those Japanese investors are holding trillions in U.S. treasuries is because the rate on a treasury is a lot higher than the rate they're paying on the loan that they used to borrow the purchase money with So it's like you borrow money at this rate, you invest it and start making this rate, but then the borrowing rate goes up to here, and then the investment rate no longer makes mathematical sense. So, of course, like a lot of those Japanese funds that are using margin and everything, they're going to sell off those treasuries. The U.S. Treasury rate will go higher. And that kind of like supports the trade. It supports the carry trade. But do you really want to be paying a 3% or a 4% interest rate on a loan to get, what, a 6% return on a treasury? No. It's like when you factor in the exchange rate costs and the trading costs, you're not making that much, and your money is better invested in something else. So what would the Fed do in that case? Well, they could expand the repo operations. They would restart quantitative easing or a quantitative easing-like program. They would provide dollar liquidity swaps to foreign central banks. It'd be a lot like the 2020 COVID response or the 2023 banking crisis measures, the bank term funding program. Remember March 2023, how that was a good time to be in HEX? They could revisit what they did then. They might do some coordination with the Bank of Japan. Quantity measures is what they might call it, to kind of help those yen carry traders avoid dumping assets, like temporary balance sheet expansions. Be like, hey, don't sell your bonds. We'll buy those bonds and put them on our balance sheet here at the Fed from you so that you don't dump them and push down the price, and you're not going to be a douchebag like Vitalik Buterin is. So if the unwind were to drain could drain like a $600 billion from U.S. markets, they're going to have to do enhanced liquidity programs. All right. All of that is going to be good long-term for crypto because a lot of that involves money printing, and that money printing will eventually go into risk assets. It will take time, though, because they've got to sort out the madness of the carry trade and the decline from it. So the thing there is that if you stacked up a lot of cash waiting for that to happen, you would get very good low entry prices, and you practically have this, I don't want to say guaranteed, but a very reliable force coming in that pushes those asset prices up. So if you're in a good position to take advantage of this, it's going to be life-changing money for you. So that's why I'm not investing any new money into crypto. I'm just stacking up stable coins right now. Now, also, the U.S. Treasury would be kind of working side by side with the Fed and side by side with like some dignitaries diplomatically across like all the different countries to do some currency interventions. Because I see the yen had a very disorderly depreciation, or even a sudden appreciation during an unwind. That would disrupt so much trade, so much international trade, that the U.S. would join Japan in like some forex, foreign exchange interventions. They'd be selling some dollars to buy some yen, going back and forth to try to maintain a stable relationship in the currency pairs. There'd probably also be like some broader G7 coordination. And you'd see Scott Bessent come out and say, well, we're ready to assist the markets in case they go lower. They probably would have to they would probably have to get closer to some allies, like even China and the People's Bank of China would have to cooperate in this because they'd get hurt pretty bad too. There'd also be some fiscal and regulatory responses to it. Like, you might see some targeted stimulus coming out of Washington if the unwind were to slow down U.S. growth, and it would. Well, Congress and the president would push for some more infrastructure spending, maybe some more tax incentives for industries like tech and manufacturing. And they would have to basically kind of do stimmy checks again like they did in the 2008 crisis and in the COVID crisis. And the regulators would also be getting involved as well. The SEC, CFTC, they would probably impose some trading halts. During the 2020 market meltdowns that occurred in March, I mean, it was basically 30% in just 3 days. The stocks actually, it's cool that stocks get to do this here. I wish we could do this in crypto. They have what's called a circuit breaker, where if it falls by a certain percent within a certain amount of time, they basically halt all the trading. They say, shut down the trading. Nobody can do any more trading. Everybody is going crazy here, and they're wrecking the markets, and we can't have that. All you stock people out there, you're just going to have to learn to
control yourself!
Because we're shutting down trading for the next 20 minutes. And I think like at one point, the circuit breaker they pulled was like so bad that the decline got so bad, they had to pull the circuit breaker, basically closing the market for the entire day. I wish they could do that with crypto. But they don't have any mechanism like that. This also means the money printer gets turned back on. The quantitative easing, large-scale asset purchases, balance sheet expansion, and liquidity injections. That's a very likely response if the yen carry trade unwinds, because it will cause like some severe stock market volatility. Nobody in Washington is going to be okay with that. So even though QE is like a cuss word to everybody at the Federal Reserve, and they don't want to talk about doing it, they say, we would never do QE again. What's going to be even worse, though, is watching the stock market go down even 10%, which is a pretty normal correction in stocks. It's not abnormal for stocks to go down 10% in a year, but they don't want that to happen anymore, apparently. And there's been lots of precedents in this here, and that's kind of an expectation in a lot of volatility scenarios, because we've been through this before, like the 2024 episode that we had. Japan's problems back then haven't been fixed. There was talk about some money printing going back in 2024, which is probably responsible for like the pops that we did get in 2024. I mean, well, they started cutting the interest rates the very next month in September. A lot of that is just due to the fact that, like, hey, we got to cut because the volatility that's going on in stocks here, we don't like that. It's not an accident that this is going on right around the time that the Fed says they're going to stop quantitative tightening. They haven't actually done it yet, but they say they are going to. December 1st, 2025. It's not an accident. My guess is the reason they're doing that is because they're thinking a disaster like this could happen at any time. And that's why they're doing it. Now, what are some factors that could make QE less likely? There'd be some caution on balance sheet expansion. And also there's other tools they would want to use at first, like a lot larger interest rate cuts or some targeted liquidity swaps, more repo operations before QE, before full-on QE. But I think if the volatility gets bad enough, they just go straight to QE. And how will you know that that's what they're going to do? Well, there's an index on CNBC here, CNBS, that will tell you that exactly, and that's this one here, the VIX, the Volatility Index. And here's the thing, man. When this thing is up, that means volatility is up, and that usually means markets are down. Because look here. This is April the 8th, just a few days after Retardation Day. That thing blew all the way up to 52. What did this thing do in August of 2024, the last time we had the carry trade madness? It went right up to 38 after being at a pretty solid low of 12. I mean, now it's at a 26, which is not good, but it's not anywhere near as bad as it was in the August 2024 episode or on retardation day. You want to watch the VIX, guys, because that's telling you that, hey, this thing could blow up here. The carry trade could blow up. And also, look at this here. It got up as high as 66 March 2020 with the COVID chaos. All right? Keep a good eye on the VIX here, guys. I mean, right now, this is how nasty it's getting here, is that the VIX is almost as high as it was at the height of the 2022 bear market. Because remember, 2022 wasn't just a bear market for a crypto, it was also a bear market for stocks. So watch that VIX. It was up 11% today. That is an unusual spike. If this thing goes to 30, there's going to be a lot of chaos going on in prices across the board, and just about every asset will start going down. So that's one thing you want to watch. What else should you be watching here? Well, like, what would be some signs that the trade is unwinding? Well, we got to watch those Japanese bonds for one, because like the recent spike is what's gotten everybody to pay attention to it, the spike in the bond yields. Now, we don't really have an exact trigger point as far as like what yield will it take to cause the chaos. But what I do think is that if it hits 4%, or if it just starts getting close to 4%, I mean, certainly if it exceeds 4% on the 30 and the 40-year Japanese bond, the math stops mathing on the Japanese debt servicing, and it's going to be adding a lot more annual costs. Like every 100 basis points adds about 2 trillion or 3 trillion yen to the government's debt burden. And you see, at that point, domestic investors, they may aggressively repatriate funds from their U.S. investment and their U.S. treasuries and jump right back into Japanese bonds. All right. Eventually, like, the thing sorts itself out, but as it's sorting itself out, it causes the price of everything else to come down. All right. Also, we want to watch the yen, because you see, like right now, the yen is at 157 in relation to the dollar. And what the analysts are all saying is that if it goes above 160, well, that's a critical threshold where the Bank of Japan is going to have to step in to save the yen. And they would do that by raising interest rates on the bonds, on the Japanese government bonds. And raising interest rates is not what the United States needs right now coming out of Japan. If they did that, carry trade blows up and it chops the U.S. stock market in half. So what are some things you should watch out for? Well, you want to watch the Japanese yen appreciation against the dollar. If it has a sudden appreciation, that means that some positions are unwidening. That could also mean that there's margin calls and there's forced yen buying that's being done to repay loans. The volatility index, the VIX, you want to watch that. When it goes above 30, and it could go all the way up to 60 if this happens, but if it goes above 30, brace yourself. It's going to get real bad. There's going to be a lot of sell-offs in stocks, lots of sell-offs in crypto, lots of sell-offs in even commodities, like gold will even go down in that, I think. Capital repatriation flows, I mean, I think you can only see that if you got a Bloomberg terminal. Liquidity tightening conditions, we're already seeing that. Because, you see, when there's global funding stress and there's higher borrowing costs or risk-off moves like bond price increases, yields down in countries like the United States or anywhere else outside of Japan, if those yields come down, that could also be leading to some stock market corrections, some crypto market corrections, because what it's warning you of is the liquidity is vanishing. The private credit is also cracking down. The Bank of Japan's policy signals, that's another thing to watch out for. I gotta see, when's the next Bank of Japan meeting here? We gotta look that up. When is the next BOJ meeting? Let's see, I think it's January. Is that right? Hang on. Let's put in rate decision. Let's see. The last one they had was October 30th, but when is the next one? There it is, December. And they were already talking about it right here on Reuters. Let's look at this story here. The Bank of Japan will raise interest rates at its upcoming... Oh, man. This is bad, guys. They will raise interest rates according to a slim majority of economists in a Reuters poll. Prime Minister Sanae Takaichi, a proponent of expansionary fiscal policy and monetary policy, who came into office a month ago, has urged the BOJ to cooperate with government efforts to reflate the economy and to tread cautiously in hiking rates. So I think they said a slight majority. Let's see. Okay, 53% of economists believe that it will happen. So it could go either way. And it's the December 18th to 19th policy meeting. That's an important day to remember. Maybe I should cover it live here, depending on like what time it happens. But, man, if they raise those interest rates, then absolutely it's going to be a bloodbath in both stocks and crypto. It's a good thing that you were watching this one guy that was streaming this whole time ever since the end of September that told you since then that Q4 is going to suck. Nothing good is going to happen in Q4. Isn't it a good thing that you were watching that guy? Yeah, I forget what his name was. There was some sort of Egyptian sounding name, right? Yeah, I don't know, but it's a good thing that you were watching that guy who told you that, yeah, the entire Q4 is going to suck, and then also Q1 next year is probably going to suck too. So the yen has been by far the worst performing G10 currency in recent months. Talked about that earlier. Although Japan logged its first economic contraction in 6 quarters for July to September, that was largely due to special factors, and underlying private demand remained firm. The median prediction for end 2026 rate is 1%, unchanged from last month. After its last policy meeting, the BOJ governor Kazuo Ueda suggested the initial momentum of next spring's annual labor management wage negotiations was key to rate hike timing. If wage momentum is confirmed, blah, 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 blah. Anything else here we need to know? In the poll, 81% of economists who answered an extra question, 25 of 31 said they did not think the rate of pay increase. And okay, that's not important. All right. So December 18th to the 19th. The 19th is when they'll announce the decision, but I think that the 19th over there in Japan, it's still the 18th here in the United States. I think so, depending on like the time difference and everything. So that's going to be a very important day to watch out for. Probably I'm going to cover it live if I can. If they raise that interest rate, it will be severe destruction, you guys. It will suck. It's going to ruin the entire year. Bitcoin will be down to at least $60,000. And you can imagine what the rest of the market is going to look like. I'm not saying this is something I want to have happen. Because, like we're never going to hear the end of it from all the bears. I'm never going to hear the end of it from the 4-year fundamentalists. But I have T-Bird back on. He's definitely going to rub it in my face, which, yeah, fine. He can rub it in my face here. But there's good news. If it's bad enough, and I think it will be bad enough, it will force emergency sessions of Congress, emergency meetings at the Federal Reserve to take a lot more easy action that will get the bull run going that we've been waiting so long for. You see, this whole year, 2025, we've been in a bear market. If you weren't watching earlier when I talked about basis trades done by hedge funds, that's all that has been responsible for Bitcoin's price movement this year. It was all hedge fund basis trading. So we've been in a bear market all year long. When does the bull market start? We'll talk about that when I come back here. But first, take a look at this. Why does crypto suddenly explode into unbelievable bull runs, only to crash just as fast? It's not luck. It's not random. It's macroeconomics. In Decrypting Crypto, you'll uncover the hidden forces driving every major crypto rally, forces tied to the global debt machine, central bank liquidity, and repeating market cycles. This isn't another blockchain basics book. This is the blueprint Wall Street doesn't want you to read. The playbook that shows you why crypto moves when it does, and how to spot the next bull run before it starts. Don't miss the next cycle. Read Decrypting Crypto. Arm yourself with the knowledge to ride the wave before it leaves you behind. Decrypting Crypto by Cairo Code. Available now on Amazon and Audible. Now, ironically, the subject of that book is related to what's going to cause the market to rebound, because of what's going to be the policy response of the United States if what I'm saying happens, if the carry trade unwinds. See, what that book does is it tells you why crypto goes up. So you can explain to your friends, hey, this is why crypto goes up here, and if you want to get invested in it, you can have confidence that it will go up because of these things that are happening. What are those things? Money printing. The money printer getting turned back on is what causes it to go up. They may have to turn the money printer back on in emergency fashion if the carry trade unwinds. Now, I'm not rooting for it because a lot of people will get destroyed, but I think it is likely that it unwinds if they raise those interest rates on December 18th. I think the best case scenario for the rest of this year is that we just go sideways from where we are right now. That's the best case scenario. The more likely scenario is that we go all the way down to $50,000, $40,000 Bitcoin. That could easily happen. But if the Federal Reserve steps in and acts like they should, well then we get going again. But it will take time, probably all the way up until June 2026, like I've been saying this whole time. The whole time I've been saying, hey, nothing happens till June 2026. Because, like, this Fed that we have right now, the current makeup of the board is very unfavorable for risk-on assets because they don't want to do any easing. But when Trump gets to appoint a new person, or nominate a new person to be Fed chairman, that's someone who will be more dovish. And even if they've already turned on the money printer, I think they would ramp it up when this person got in. All right. Now, some other stories here to talk about here is the dollar index. This has been its journey practically for the last 6 months. Seemed like we were going to have it chop way down over here. This was, when was this? September? Seemed like it was going to keep getting weaker, and then it kept getting stronger. Why is it? That's because the Japanese yen is weakening. That's one of them here. But also, Europe's growth outlook is softening, and then China's money printing is occurring. They're weakening the yuan. So the dollar is catching a bid in the sense that, like, it's getting stronger compared to those currencies. But it may not... When we talk about it getting stronger relative to those currencies, though, that doesn't necessarily mean that it's going to stay like this here. I mean, this could reverse course and start going down again. If the tariffs get reversed, it will start going down again. Here's what I'll say. Japan, yen has been sliding hard even as Japanese bonds hit multi-year highs, and the government rolls out a massive 17 trillion yen stimulus package. In a healthier environment, you'd expect the combination to strengthen the currency, not weaken it, but markets are reading it as stress, not as renewal. So they're kind of seeing it as desperation on the part of Japan. Now, what Sine Takeshi is trying to do She's trying to force the Bank of Japan to accommodate, to turn on Japan's money printer. They haven't turned it on yet over in Japan. She wants to force it to happen. And part of forcing it to happen is do lots and lots of stimulus spending, lots of fiscal policy, lots of stimulus and goodies and giveaways to get reelected, give away free stuff to all the Japanese there. And that brings about fiscal dominance, meaning the central bank is going to have to accommodate the central government, because if the central bank tries to push back and try to force the central government to do the right thing or to get disciplined, if they try doing that, it can wreck the entire country's economy. All right? You see, I don't think we live in a time. We don't live in the time anymore where you can be Paul Volcker. You can't do what he did back in the 70s, because the debts on all these countries are so high, and the debt to GDP in all these countries is so high. So that's why you're going to see fiscal dominance here in the United States and fiscal dominance over in Japan. This is something that kind of caught my attention earlier, that apparently somebody is offering you money to promote Zcash. They ain't done it to me here, though. I never got no message here to promote Zcash, but a lot of people think, well, this is the reason why Zcash is popping. I don't know, but I'm not really all that interested in Zcash. So we talked about this story here already. Now here's a story we really want this in everyone's faces. Everyone out there is saying, Richard needs to use the SAC funds to do a coin buyback. Here's the deal, guys. Other chains have done that, and it's not worked out for them. So, of course, Richard has seen this and is thinking, why am I going to piss away money from the SAC funds to do something that clearly doesn't work? Because when was this posted? This was posted just after the October 10th liquidation, when Sonic had gone all the way down to 16 cents. So they did a token buyback. They pushed the price up to 20 cents, yes. But then it immediately collapsed right after, down to 12 cents. So all you idiots out there that are saying, oh, he needs to use the SAC funds. Talking about you, Corey Costa. You're just saying that he needs to do that. Why is he going to do that when Sonic did it and it didn't work? When Hyperliquid did it and it didn't work? When Pump.Fun did it and it didn't work? It had the exact opposite effect. And God knows Spell Token did it and it killed the chain. Everyone out there that's saying, Richard needs to use the SAC funds. It's time for you idiots to shut the FUD up, because you're wrong. You all are wrong when you say that that's going to help the chain or that's going to do anything at all. I'm trying to get one of these clowns to come on the channel and tell him, so I can tell him to his face, look at this. You want Richard to do what Sonic just did, and it's not helped Sonic one damn bit. It has had the exact opposite effect. So you're just wrong, and you need to admit it and make a decision now. Do you want to be in this chain or not? Do you want to be in these projects or not? Because if you're waiting for the SAC wallet to buy back your bag, it's not going to happen. And even if it did happen, it wouldn't help you, because every other chain that has done that has wrecked.
Hey man, just want to let you know that sometimes you gotta shut the fuck up. And this current time is just one of those times you gotta shut the fuck up. I don't think you're a bad person, I just don't want to hear you talking anymore. You gotta shut up.
Sergey Baranov, you're out there on X talking a lot of trash, and you did say you would come on my stream, and I do hope that you honor that. I do hope you do. And I'm not going to say anything bad about you if you do. I'm not going to say anything bad about you until you do. I mean, if you're just trying to run down the clock and hope that I forget, well, then, yeah, I'm coming after you. But I'm going to rub this in your face. So you want to have the SAC wallet blow its load buying back the coins. This is something I'm going to point out here to you. So you want to do a little bit of pre-interview homework here, Sergey. You better start doing some homework on what's your response going to be when I show you this. Every chain that has done what you want Richard to do has had the exact opposite effect. And you know why that is? It makes perfect sense why that is. It's because knowing that a buyback is coming attracts the wrong people. When they announced this, what happened was a bunch of people bought into the token, trying to front run the price appreciation from the buyback. And when the buyback occurred, they immediately sold. So it had zero effect on the chain when they did the buyback. And then there were some people that were already in the token. New people came in to buy it. The previous holders sold out immediately. And that's why the coin went down further after the buyback. It went to a much lower price than it was at before the buyback. So this hope of Richard using the SAC wallet to pump your bags is a stupid hope because it has not worked for any other coin. Why in God's name do you think it's going to work this time? Sergey, you better have a good answer for that when you come on, because I am going to bring this up in every other example, and if you ain't got an answer for that, you're not going to look too good. And I'm not out to make you look stupid, but I really hope you got a good answer for it, because they just plowed $6 million into Sonic, and it's had the exact opposite effect. Everybody else watching, you need to realize that too. If you're hoping Richard's going to buy your bag and that's going to make things good for you, it's not. Always had the exact opposite effect because it attracts the wrong crowd. This here is also like why I think the price could go between 30 to 40,000. Man, it's not that I buy into technical analysis or these megaphone patterns or anything. This is just, it says that it's a possibility. Now, this guy thinks it's going to happen before December. I don't think it's going to happen before December. I think it happens in December. And I think that it could also stay that way for much of January. I think Q1 is going to be pretty bad. Just because there are some people that are waiting until the tax year rolls over to sell. Now, how about some real good news? I know that I've been kind of like beating you guys down throughout this entire stream and killing all of your hope. How about I give you some real good news, all right? Here's the deal with why I think everything turns around next year. I mean, for one, we've been in a bear market this entire year, and bear markets usually just last a year. But then two, when you look at the nature of bulls and bear markets, what is the story that's going on as each one occurs? You ever heard this phrase before? This is something that we used to say all the time back when I was in TradFi, and that's this here. Bear markets slide down the slope of hope. Bull markets climb a wall of worry. When you look at this year, hasn't that really been the case that throughout this entire year, we were hopeful, thinking, well, this is the fourth year. This is when it's supposed to do good. So at some point this year, it's going to do good, right? And we kept going down. We kept grinding down. That is exactly how a bear market works. It slides down the slope of hope. That's very common. Now, why does it end next year? Well, what's the story? Like, what's kind of causing there to be hope? And what's going to cause there to be worry next year? As you see, a bull market climbs the wall of worry. I think we see a wall of worry next year. So, what's causing it now? What's going to cause it then? See, what's causing it now is the 4-year cycle theory, the 4-year cycle religion. Everyone's thinking, well, we're supposed to have a good year this year because 4-year cycle. And everyone was hopeful for it, and none of it materialized. And the U.S. economy is in severe trouble. It's really sucking out there. The jobs report today confirms it. Nobody has money to invest in crypto. But next year, when it turns over, a lot of that 4-year cycle crap is going to go away. Or the worry that, oh my God, at some point we're going to get the top because 4-year cycle. A lot of that crap goes away next year, particularly when we get to like February, March, April. I think by April, you stop hearing any of that. And people are like, oh yeah, we're totally in a bear market now. And everybody that was going to sell probably has sold by April. But then, because everybody is thinking that it's going to go lower because we're supposedly in a bear market, that is where the bull market actually begins, because now we start to climb the wall of worry. That's exactly what is going to happen, I think. And when we take a look here at some of the important stats, like this one in particular here, the greed and fear index. Ooh, look at this. Look at how it's grinding down. Like this is very abnormal for the time that we're in right here. This might actually be the longest time that we've been in extreme fear this cycle. It was like, let's see, when did this start? November 13th. So it's been a whole week in extreme fear. Not very common, but also how long we've been in fear territory in general. Like that started back in October the 10th. It's very unusual to be in that fear territory for that long, unless we're in a bear market. And that's why I come up with the case here that this year was the bear market year because of how long we've been down in the fear territory. This is not common of any type of bull market. And also, when you hit the top of a bull market, you're up in extreme greed. You're not just here in greed, which is where we were on October the 6th for one day. We were just up in greed, and like the very first level of greed was penetrated. Like we just got up to 65? Or not even that. Let's see. What does it say here? Be able to see it on the 1-year chart. 62. Yeah, we're only down at 62. So it wasn't in no extreme greed there. So that's why I stand by the case that 2025 is the bear market year. And I think 2026, it gets better, but not until Q4, or not Q3, excuse me, not until June of 2026. That's the earliest when it starts getting better. All right. I don't see that many questions out there. Let's see. NJ Dub asks, but where does that put P-Dye exactly? Don't know anything about what's going to happen with P-Dye. Sorry. Can't help you on that one. Checks my pulse asks, so when Lambo, sir? We can't even be talking about any of that until Q3 of 2026. I know that that's a very unpopular opinion. So far, it's been right, guys. And I know that today was a very dark day. It was not like the most fun, pleasant program, not the most fun, pleasant show I've done. But it's important that we had this conversation so you guys know what to do here. And I'll tell you, again, what I'm doing is I'm not buying any more crypto. I'm just stacking stable coins because I'm waiting for that carry trade to unwind, because there will be severe blood in the streets when that's the case. I mean, this isn't a joke. It could be so bad that on Wall Street, people will be jumping out the window. Because that did happen in 2008. That could happen here if the trade unwinds. That $1 trillion in U.S. treasuries that Japan holds, if they dumped all of that, man, it's going to get really ugly out there. Really ugly. So, you want to be in a position to buy when that happens, though. you don't want to be further invested. You don't want to be so heavily dependent on it where your last dollar is already in. And I know that it sounds like, well, we've been through so much pain already. How much worse can it get? Most altcoins are down 90% or more. Some are even down 99%. How much worse can they get? It can get a whole lot worse. A whole lot worse. And we're talking about adding a zero on the right side of the decimal to all of the core coins. We're looking at Ethereum. Ethereum being down at below $1,000, like 300. That could easily happen. And I think that in the long term, it all could be a good thing because there's a lot of crypto projects out there that are just pure crap, and they need to die, and they need to go away. They need to go the way of NFTs. Nobody talks about NFTs anymore, nor should they. It needs to go the way of the metaverse. Nobody talks about the metaverse anymore, nor should they. Because both things were just complete worthless crap. I mean, I used to watch Wendy O's show back during last cycle. She'd say, "Welcome to the O Show, everything crypto and NFTs." She doesn't say that anymore. She doesn't say the last part. Just says everything crypto. That's how you know NFTs are dead. And we need that to happen to a lot of coins out there. And I'm not a hater that's rooting for anything to fail or anything to go straight to zero. But I do recognize there's a lot of crap that doesn't need to be in the market space. And I'm also kind of hoping that when the market structure bill, the Clarity Act, when that goes through, it eliminates a lot of the crap as well. Because I'll tell you, like, I only see maybe 200 projects in total that are worth any investment at all. I'm not rooting for coins to fail. I don't think that that's a good thing to do. And I particularly don't like it when people celebrate or make fun of the failure of other coins. Even though the PDI guys treat me like trash and say bad things about me, I'm not going to be dancing on their grave if it fails. You know, I look at Ivan on Tech, a very disgusting person. If I ever see him, I don't think I could say what I would do on YouTube. Like, I could just nuke your channel if you say anything like I want to say. But it's very disgusting what he does, what Eric Wall was doing, basically dancing like a clown when people out there, good people, were really worried. I'm not going to do that, and I'm not hoping that that happens. But we could get to that point where a lot of things will die. All right. Now, not rooting for the carry trade to unwind, but I do expect it to. And you guys out there, you got to do some soul searching right now. Do you continue putting more money into these markets, into your coins, or do you stack stables? Do you continue holding what you have, or do you sell? If you can't handle seeing Bitcoin at $40,000, you don't need to be investing right now. I'm not telling you to sell. I'm telling you to do the soul searching that you need to do right now to make that decision for yourself. But Bitcoin at 40,000 is a real possibility. That's why I kept saying it this whole darn stream. As I don't see any more questions in the chat here, so I think that's going to be the end of this one here, guys. But always remember, there's one thing that you need to do.
Control yourself!
All right, we'll see you next week, you guys.
That is it for us today, you glorious degens. Smash that subscribe button to join the rebellion, and follow me on X at ReinventIdeal for more unfiltered truth bombs between live streams. And if this was your first time listening, head over to reinventideal.substack.com, because I have a free gift waiting for you there. If you become a free subscriber, you'll get a free copy of my book, Your Parents Were Wrong.